Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. I'm making professional trading simple. Welcome to my Sunday video, the video to start the week. Getting ready for what we'll see in this week's trading, along with some new equity plays for you guys to look at. If some of the equity plays that we did last week turned out very well. If you are a subscriber, you saw some good ones as well. If you're not a subscriber, some of the ones that we played last week, just for your information, the newsletter works exactly like this does. It's a video. You just sit and watch it, take notes, support and resistance areas. There's probably 12 or more different equity plays in the subscribers video, so you have a lot more to choose from there. And I go into a lot more detail about the markets and what I see coming up. I talk about different things that I don't talk about in my daily videos. It's really it's a great deal. I believe for 15 bucks a month, you can't go wrong. No obligation to stay with it for a year or anything. Quit if you don't like it after a month. But I think you'll really like it if you just give it a shot. Some of the ones we played, if you're a subscriber, was ABX. We played this one last week, and that turned out to be a very good winner. And VIT was another one we played last week, along with a bunch of other ones. I won't get into all of them. But anyway, if you're not doing the newsletter, think about it. It's good stuff. It'll be of great use to you. Had a lady last week that played one of mine option-wise and made like 150% return on her money. Oh yeah, on one of the equities we were playing. So anyway, it's well worth it. If you're not already doing it, sign up. 15 bucks, super cheap. That's what most of you pay for one trade in and out. So it's well worth it. And it saves you from doing a lot of homework. Just 15 bucks a month to save you the homework of trying to find good plays for the week is well worth it in and by itself. All right, so what are we looking at this week? Well, we're trying to figure out if we're going up or we're going down, just like we do every week. It's the same story. Some weeks it's a little easier than others to figure out which direction we're going. This week is, or the beginning of this week is not so easy. There's a lot of, boy, I've been, blasted with, yeah, but, and it's always, this guy says, we're crashing. Well, that's great. What do the charts say? That's what I have to ultimately look at, and it's very difficult right now because the charts really don't give a clear direction one way or the other. So, like I've said before, some guy can say, yeah, it's going to crash, it's going to crash. Well, that's great because eventually it will crash, and then he'll go, yep, see, told you. But in the meantime, have you destroyed your account waiting for it to come back down? The markets can stay irrational much longer than most of us can stay solvent. So if you have a huge account, then those guys are great because eventually they're right, and maybe you make some money and you just keep averaging on the way up or the way down, however you decide to play it. But for a lot of people that don't have large accounts, you can't be wrong by that far, or you're going to get your account destroyed. So let's look at the charts, see what they're telling us, and just prepare for a break either one way or the other and see where it takes us. If we look at the Dow on a 60-minute, you can see that this action here is what we saw all day Friday, all sideways action. We've had some pretty volatile moves to the downside, continued volatile moves to the upside, following a lot of the direction of last week. Here we had a flat day. This, at the very end of the day, started to pop straight up. That's, hanging out up here is actually pretty bullish in the long run. This is bullish behavior to stay up here like a high basing type of a formation. So we may still see it pop up to this line here early Monday morning maybe. Maybe we gap up a little bit. Maybe we just push up a little bit here into the early mornings of Monday. And maybe we see a little bit of a pullback from this point. If it breaks this area, though, I'd certainly be looking at it to retest the highs. And if it breaks the highs, you're going to see a lot of bears cover. FYI, I am short the market right now. I have some puts bought out, but they're bought out for quite a way, so I can hold on to them for a while. But I will seriously be tempted to just get rid of them and wait to get in at a different level if it gets way up here and breaks this level. So if you're short the market and it breaks this level up here, the pain is yours, but you want to be very careful if it does that. Here you can see we bounced off this lower trend line here. First of all, we broke this channel line here. The Dow has been, quote unquote, the strongest of all the indices so far. It has come back down, broke this lower channel here, but if I draw in a little secondary line, we could use this maybe now for a secondary line of support. Really, we're looking at the 50-day moving average here. And I drew in a little gray dotted line. And this is just a could be, for instance, type of a line. So I do not have enough information to make this a truly valid trend line here. But drawn in this way gives me an idea of where we may stop, pause, turn around, and that would be right where we're at right now. So there's really very little wiggle room if this is going to be a valid trend line. If it breaks up and above this, then this gray line's gone. There's no sense in keeping it. And that could very well happen even early Monday morning. NDX on a 60. Let's look at the NASDAQ. Look what it did all day. Up, 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 up. It's still continuing to try to push its way up and above this level here. If you take these two candles, where they're at, and follow this up, it's making an ascending triangle. This little area here with that little area there is an ascending triangle. That is a bullish pattern. So a break above this could take us right back up to 1750, and 1750 coincides with my little confluence of resistance up here, which would be the lower channel line and this previous resistance area here. This would also make for a very nice shorting area if you're looking to get short the markets. This would be a very safe place to get short, as I had in my slope video that one day last week. Here you can see the daily. We had a run up here on, well, it's lighter volume, but it's still a run up. So price is price, and price is moving up. So regardless of what everything else is doing, price is moving up. If we break this area up here, we're going to see this 1800 area hit. Maybe it rolls over and starts to make this little head and shoulders. This head and shoulders is now kind of on everybody's map. This big head and shoulders on SPX and the NASDAQ and whatever else. I don't know. Is it too obvious? Is it too obvious? I mean, right back here was a head and shoulders setting up too, and look, it was too obvious. It ran up another, mucho points. So be watching this. This is what we're waiting to see. If this thing rolls over, it's only a head and shoulders, and it's only a valid head and shoulders if it breaks this area here. And for me, ultimately, it really needs to close below this area here. And we even need a few more things than that. But if we break it, I'll talk about them then. I'm not going to talk about them now. But really, don't convince yourself that this thing's going to roll over just because you think this is a head and shoulders for sure, because that's when the market gets you. That's when it psychs you out, it fakes you out, and it starts getting you mega short here, thinking it's going to roll over, and then it never does, and you get trapped. SPX on a 60.